in the long run, unforeseeable, unpredictable events can have an impact in a year, a couple of years. But if you can expand your time horizon, we often hear this in entrepreneurship that if you have a very long term vision, you eliminate competition. It's the same in investing from the retail investor's perspective. If you're looking to invest for more than 10 years, you don't really need to care about what's happening in a week, in a month, in a year. Most things will take care of themselves. Buy two good index fund, uninstall your broking app, use less social media, you'll be good.
Isn't that the blanket advice these days now? Stay away from social media for your mental peace, financial health, everything. But yeah,
And me
very
saying
well
that is
pointed there.
ironical. My business comes from social media, but that's the truth.
Fair enough. All right, Kaustubh, geopolitical shocks often hit interest rates and currencies first. If you talk about debt funds, can debt funds really then act as a stabilizer in the storm? How should investors think of fixed income, perhaps as a cushion to
Yeah,
balance
thanks,
their
Mudda,
equity?
and good morning, everyone. Yeah, thank you, Mugda, and good morning, everyone. Thanks for this opportunity. Yeah, you are right that we are in the mid of some bit of a geopolitical tectonic shifts, and which is leading to a lot of volatility in currency markets and, in fact, across all markets. Given that India, as of now, is running very prudent macroeconomic policies, and recent rating upgrade by S&P is one of the, I would say, testimony for it. I think even in the current episodes, once the tussle around the tariff settles down, the local policymakers will rush to provide support to local growth, which is seeing headwinds clearly. And in that scenario, what we expect is that monetary policy do have a lot of space given that our inflation is not meaningful high. In fact, it is running below the targets, and nominal growth is slowing pretty fast. In fact, it is a worrisome level, barring COVID year. It has not been such low level. So in that, I think over medium term, debt funds will make lot of compelling case to diversify your investment allocation at margin in these testing times.
I think some part of allocation should definitely be global. And there are 4 or 5 broad reasons for it. One, you get geography diversification, extremely important because different markets do well at different points of time. So, for example, if you see last 1 year, S&P 500 is up 16%. You have Hang Seng, which is Hong Kong index, up 40%. You have DAX up 30-35%, and you have Indian markets almost flat. So it gives you geography diversification. It to a certain extent insulates you from currency fluctuations as well. Third, more importantly, you get exposure to companies which are not in the home turf. So, for example, India has hardly any play on semiconductor chips, for example. There is hardly any play, let's say, on AI in terms of on the listed space. In terms of there are a few plays, but very limited plays. There is hardly any big social media giant which is listed. Let's say, for example, TSMC, which is in Taiwan, makes like 90, almost 80-90% of the in terms of chips, they are designed by NVIDIA. So you get plays on companies which are not listed here. And last point, more importantly, I think if you can align it with your goals. So, for example, in a family, let's say a child has to go overseas for education. And let's say you say 1 crore or 2 crores is the expenditure you foresee happening over the once that stint takes off. So some part of the portfolio, whether it is 5%, 10%, 15%, can go towards that in dollars. And not only just international funds, Gupta, I also think in an environment like this, some exposure to commodities is also important, especially the precious metals. So, a balanced portfolio is extremely important, which covers all of this. And most importantly, see low correlation.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.